is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it'll take you where you want to go. Natalie Goldberg. Market-wise, let's take a look at it out here. We have the Dow up 7, NASDAQ is flat, S&Ps are down $1. Gold contract down $12.70, trading at $1,070 an ounce. Silver down 5 pennies at $14.17 an ounce. Platinum off $10 at $8.55 an ounce. Copper down 2 pennies at $2.09 a pound. Light sweet crude down $1 at $40.73 a barrel. Bonds 10-year up 2 ticks. 126.23, 30 up 20 ticks, 153.28. King dollar up 152 ticks, trading at 99.69. The euro is down 35 at 106, and the yen is trading up 20 at 123.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? The world of the S&Ps. Can you say ABC down? This is what we have, folks. What do we do out here today? The SPY. SPY gets to a price point of 207.04. What the SPY was doing is going into the initial downdraft of November 9th. The low of November 9th is the 206.95. Volume there is 131 million. We're going to probably end up doing about 100 million. You're doing 86 million right now. Bottom line is that you got a B2C of an ABC structure lined up. You get a rejection of price on the SPY right now at the 205.41. This projection gets you down to the 197.56 area. It's going to be intriguing to see how this thing shakes out. Thus far, you got a rejection, all of the above. Price, volume, ABC, structure. On the way down, looks like it's just set up. The 3 Qs. What do we have in the NDX 100? NDX 100, same type of setup. NDX 100 today got up to a price point of 112.29. Right now, you're trading at 111.41. The difference in the SPY versus the NDX goes like SPY versus the NDX goes like this. The NDX, where it had its volume, when we broke down on the 12th, the low of the 12th was a 111.96. You do 112.29. We did 31 million there. I suspect we're going to do probably about 28 million. Same type of setup. Your A point on the NDX is 115.47. Your B is 109, so you got $6 there. Your C is a $112.29, which gives you 106.29. So we'll see how that shakes out. The 106 area in general is from October 8th. And October 8th, we did have a little volume there. So I expect that's where it looks to me that this next leg is going to come down. This leg, I do expect, is going to be fast and furious too, folks. The reason being is that this is quite a failure out here. It was a classic failure, actually, but it was quite a failure. Markets love to go, when they come down, it come down on volume. Well, first off, it made high on light volume, come down with volume, comes back up, taps the low of the high volume, gives it up in price, gives it up in volume. Back off's pretty quick for a Tuesday, I can tell you that, early in the day. Gold contract. What do we have with gold? Gold contract gets down into the, okay, so let's get this baby. Gold, we hit the, GCC. Gold, come on, baby, get up there. GC. Gold, we hit 1064. We did 167,000 contracts, which is big contracts. Now, it was coming into 207,000, but what we haven't done thus far is got over the 1073 area from the November 12th area. We'll see whether I can do that in the next few hours. It's going to have to get back inside that area, number one. What gold is doing, I do expect what you're going to see is you're going to see a false break downtown, and this is why. If we take a look at the GLD, what gold is doing, folks, is that when you come down as hard as we have come down to the gold market, what ends up happening is that most of the time, it's going to break out the lows and be a false break downtown. When I say most of the time, if you've been coming down and have lighter volume, and this is the big and, what we're doing is that we're testing the 2009 breakout level. That level is 103.26. Now, the GLD's broken it, the XAU's coming into it, the HUI's coming into it. They're all coming into a dramatically lighter volume. The key, of course, is that it's going to have to hold price. So we'll see if, in fact, it holds price. Thus far, the GLD has to get above 103.25. If we take a look at the XAU, what you're going to see inside the XAU right now is at 43.77. Inside the XAU, whoops, bring that back. Give me a different chart here. There she goes. Okay, so inside the XAU, you're dealing with, well, the XAU is a different ballgame. One second. That's a totally different ballgame. Disaster. That's what it is. Inside the XAU, you're dealing with, the XAU has to stay above 42.72. The HUI, the gold bugs index, we look at the gold bugs index, what we have with the gold bugs index, put this back, and what I do expect, I expect both the HUI and the gold bugs index to basically flush this bottom out. The bottom I'm talking about here is that 101.28. So we'll see where that does shake out inside both of those indices. Bonds. Let's go to the bond market. Now, the bond market continues to give us the most consistent information. And guess what? It's out here again today. These bonds that want to go topside. What you have out here with the 10-year is this. The 10-year got down into 126.10 today. We're at 126.25. You rejected lower price. You didn't make it into the swing. It looks like you're going to get a small ABC setup that's going to bring this back up into the 128.09 area, and we'll see how we'll attack the high. I'm telling you, folks, it's going to blow minds. It's going to blow minds again, because it's like, how does this bond market just does not want to go down? Right now, the 30-year is on its way. The 30-year is well inside the higher range. The bottom of that range is 125.25, 151.25. We're at 154. 30 years going up to its highs. This is Tom O'Brien. This is TFNN. Dow is down 15. Nasdaq's off 5. S&Ps are off 4.5. That's after these markets are up over 1%, folks. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 24. Nasdaq's off 6. S&Ps are off 5. And with that aspect, folks, just so you can, if you haven't been in front of a machine, you get some price spread out here today. The high in the Dow was 17,599, and you're at 17,456 right now. You take a look at the composite, what you have with the composite. The NASDAQ composite was at 5,023. You're at 49.79. And on your S&Ps, what we have with the S&Ps traded up to the 2066, and right now you're at 2049. Now, folks, let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, Basil is a great program on TFNN, broadcast every trading day, 11 to 12 Eastern Standard Time. You can get it right on your cell phone no matter where you are, tfnn.mobi. That gives you the full audio. If you're in your car, just put it on, folks. Get the Bluetooth right to your speakers. If you're at home or somewhere you can watch it, go to tfnn.com, watch Tiger TV. It's on the right-hand side. Basil also has a great newsletter, The Opening Call. The way you test drive that, come to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive that 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
A good day, thank you. Yes.
Yeah. What's the weather up there?
Now it's starting to get cold.
Yeah, not bad. Yeah. It's November 17th though, or something. Yeah. Right.
Actually, up until just 2 days ago, it was pretty good for November. Yes.
Sweet. Mm-hmm. So what are we going to look at today?
Well, I'm showing you the Dow. And the Dow, make that top, the peak F top, the 6th highest peak, it went to, on the 3rd of November, it went to 17,977. Pulled back sharply to the 17,001, I believe it was 210 level. That was yesterday morning. And it's had a bounce today. And you can see this little black line, the charts that everyone's looking at. On the left is the Dow daily.
Okay.
This is the Dow weekly. And this is the monthly. And right here, I've got the 120-minute chart. Gives you a nice overview of the short and the long term. And what's really important here is that 9-period moving average. What I'd said to subscribers this morning is we're going to see how the price is either deflected from that 17,550 level where the 9-period moving average is, or if there's a spike higher and the Dow turns 17,500 into a support level. If the Dow had to go into the 17,660 area, I suspect there'll be even more of a short squeeze. But this is a really important moment. I'm going to get to you were talking about
Well,
the dollar
they sold the heck out of it, didn't they?
I'm sorry, what?
I said they sold the heck out of it.
They did. And it was a very big move from Sunday night when the market gapped down. And you went, in fact, the S&P futures went about 60 points higher. That's a pretty big move. Now, this is going to be very important in my work. The weekly chart, the stochastic, is still at 87%. In the 80s is very good. And the MACD is expanding. So that means that if there is a breakdown, let's say by Friday or Monday, and the Dow takes out the low that was made yesterday and it starts to trade in the 17,100s, that 17,000 psychological level, the millennium level of 17,000, becomes really important. It becomes important psychologically and technically. Why? Because the technicals in the daily chart have not improved very much at all. They weakened, and yesterday's big move didn't do all that much. It did cross the stochastic a little bit positive, but it's still down at 16%. That's very low. But most importantly is if this 200-period exponential moving average is coral colored at 17,346 right there, if that gets taken out and the low gets taken out of yesterday, basically what you're looking at is a short squeeze, and that short squeeze means that that was emotional buying, and it means that you will start to get emotional selling if that level gets taken out. So yes, impressive move, but I want to see Dow 17,660 and higher, at least by Thursday or Friday, because that's going to be very important to say that that weekly chart is still holding very well, and that's the larger trend. That's the one you want to be looking at. But within that context, I've spoken to you for a little while now about certain stocks that I think have been very key, at least in my work, looking towards the economy itself. So Cintas is an overalls and clothing rental company. We've been short for a while, and it's down at 89.41. It made a high of 94.38. The weekly chart did this pattern. I've just spoken about it before. It's what I call the stork leg formation. Basically, it's a long leg that goes to a certain level that stops. Then there's an oval pattern that I call the body. So you've got the leg, you've got the body. Then it breaks the body high, in this case 89.74. And it goes to the neck, the head, and then the beak comes down very sharply. That's going to be the test. And that, to me, I think might be telling us quite a bit about the economy. Maybe it's a select part, but to put that together, we're also short a stock that's just like Cintas, which has just been an amazing stock for a few years. So Orly, which is O'Reilly Automotive, has done the same thing. So we've been short this, and we shorted it at 277.66 was the high. We shorted it at 273, just off the high, and it dropped down to 258, and it bounced back. But here again, this is a rotation through the market, through sector by sector, and you and I have spoken about that, where we looked at certain sectors of the retail, certain sectors of the restaurant. You remember we spoke about it a while back, and you've seen CMG, Panera, these stocks have come down sharply. So this is very important to see what happens with Orly, because it's also really part of the economy. It's part of the used car market, and the real market of General Motors and Ford. They talk about 17 million cars, but General Motors has acted very well. Ford, on the other hand, look at this. It's come off the low, but it's still 10.44 was the August 24th low. Bounced to 16, now it's at 14. So it's not doing all that well. You had spoken just a moment ago about, and I'm going to do a lot more of this I had a call today to my show, and we were looking at the DZZ, which is 2 times short the gold index.
Okay.
And so this is now the dollar, which has the same pattern. So my dollar now looks like it's going to a leg F. And F is where you've got to be really careful. Doesn't mean it's going to crash, but this is where the yellow light goes on. And it has made that cup formation in the weekly chart going towards the previous highs. So this is the area where you start to see resistance. Together with that, if you look at the DZZ, this is now a chart that looks very similar to the dollar. Why? Because gold and the dollar sometimes go inversely, and we've seen that lately. Now, this is also in a potential leg F to the upside, which means that right at this particular point, and this is the reason why I say this is quite an important moment both in the market to see whether this is just a bounce or whether we're looking at this rotational correction continuing, because gold had a spike down today, but this is leg D. So I'm going to be watching gold really carefully. I don't think it's going to make a huge move, but it could be a pretty nice little bounce here. And we'll see what happens, because some of the gold stocks actually have got slammed. Even the ones that were doing really well recently are coming back to that left side low that was made in July.
Yes.
So this is going to be quite an important phase. You know, it's the same thing in the euro. Euro overall on the weekly chart looks terrible, but on the daily chart could be ready for a little bit of a bounce here. So we have not seen what happens when the dollar really comes down to the market. Mostly when the market's been going higher, we've had the general market moving higher. So when I say this is an important moment, it's because in the rotation through the different sectors, we're also now seeing that there's a possibility that maybe we're getting a little bit of a change in some of the key things, and we're going to watch the commodities very closely this week.
And folks, you can come over to our website at TFNN, go to newsletters, trading newsletters. You can test drive Basil's newsletter right now, the opening call, 30 days absolutely free. And of course, don't forget, 11 o'clock tomorrow morning, right here at TFNN on your cell phone, TFNN.MLBI. Basil, have a great one, safe one. Look forward to the show tomorrow.
Thank you very much, Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome, folks, and you're going to love this one, folks. Okay, this is pretty cool, actually. So Pitcher, you know, when the bottom line is that, you know, banks forever have been paying large fines. You know, they always claim they didn't do anything wrong, but yet they pay hundreds of millions of dollars, right? And then in between that, of course, they're always axing people and burning people and throwing them under the bus, saying, okay, it's their fault, and none of the executives ever, you know, get tuned up. So today, a former Citigroup currency trader, Perry Simpson, won a lawsuit. This is over in the UK, against Citigroup. over claims that he was unfairly fired during investigations into allegations of the currency market rigging. Citigroup, the court found that Citigroup did basically fire him without notice. So check this out. This is what's amazing. So this was the first case, and there's a bunch of them coming due in wrongful termination suits relating to the exchange currency manipulation in London. Now, so this is what the guy was saying. This is what's really cool, is that he was saying flat out, he wasn't saying that he wasn't doing it. He was saying that, hey, he wasn't rigging it or manipulating the market. He was following orders from his bosses, okay? The bottom line is that he said that Citigroup basically burned him after the bosses told him what to do. Now, this is the kicker. This is awesome, man. I love this part of it. He decided that he wasn't going to hire a lawyer because he felt that Citigroup had all the lawyers in their pocket. And guess what? This is like crazy reading this. He relied on a book about employment tribunal claims, according to his statement, and that's how he beat them. Bottom line, of course, Citigroup is saying, hey, no, we did the right thing. Bottom line is they lost, folks. And I suspect we're going to see more of those come and do. But, do you know what the smart thing was there? The smart thing was he wasn't saying that he was not manipulating the market. The bottom line, one has nothing to do with the other. He was taking the boss's orders. Citigroup couldn't do it. They decided to burn him instead of burning the boss. Pretty wild. Okay, so market-wise out here, what we're looking at is this. The aspect, and I've been bringing this up more so on the morning shows and the afternoon shows. The market, folks, where the market is right now, we've been for approximately a year. We're at the same highs. What the difference is that in the past, let's say, at least good month and a half, each and every day, when the market, because we're still at all-time highs. I mean, that's the reality, right? I mean, it's Dow's at 17,489, and when you take a look at the high for the high period right now is laying out there. Let me just see. Okay, so the high is 18,351. So you're about 900 points more. That was in May. So more than likely, the May probably was the high. That being said, each and every day, when we start the 10 o'clock in the morning program off, my son and I, you go through how some of these equities have dropped out of bed, and it's amazing, okay? The drop out of bed today was Dick's Sporting Goods, okay? Just big numbers, man. I mean, Dick's, down 10.5%. It was down 15% this morning, but 10.5%. Biogen is off 1.5. Chipotle, Chipotle's not bad. Under Armour is down 5.6. C-Trip is down 5.8. Grange is down another 2.5. Intercept Pharmaceuticals down 3.5. Natural Health Trends is down 13. Radius Health is down 6. Universal Insurance Holding is down 33. Adaptus Health is down 20. Big numbers, folks. That doesn't happen, okay, in healthy markets. It just doesn't happen. The underlying market here is a disaster. And when you take a look at some of these, if we go over to Dick's, and we're not talking small stocks, folks. Dick's is a $6 billion company. $6 billion with a B. Come out with the numbers. The numbers weren't that bad out here today. Bottom line, they blow the stock apart. So you're at 36.55 right now. The low was 33 out here today. Monster volume though, so you're going to be back down into those lower numbers. And what it's doing, there she is right there. She's making her way. Okay, this is intriguing. So we hit today 33.42. The high of August of 2011 is 36.11. The low is 27.86. That August 2011 area, folks, is the next area that S&P wants to go to. The first area, now this is a classic, if you want to just see how this is set up. The classic has to do, if I bring the SPY back. So for, 7 or 8 months, I was looking for the October So the October 2014 level was sticking out there like a sore thumb. Actually, look at how long. So October of 2014, you had a high volume swing low, $181, right? It was there the whole time. Well, I think it was a year, almost a year. It didn't get hit until August. We hit the 182.40. The low of October is 181.92, but we hit it with 1.6 billion versus the 1.3. So what that sets up is at least a test of that area. That's the first part. The second part is more dire, folks, and what it is this, is that the amount of equities that have now gone down and they're going after the August 2011 area are not substantial yet, but there's been more than a handful of them. Inside the S&P, the SPY, you know what that number is? That number, folks, is 120, and we're at 205. And when you look at a chart, that is glaring. It's sticking out like just an amazing number, meaning high volume. It's the last place that we had volume at all on the way up. You know, so 120 was the low in the weekly. 130.96 is the number. And I suspect, guess what? That's where that baby looks like it's going to go down to. We take a look at some of the Dow stocks out here. You got American Express down 40 cents. We get Exxon off a buck. Oxy's down 54. Let's go look at that oil market, because that oil market is taking a little destruction out here today. It's down 2 3/10%. You're trading at 41.80 on this contract, and it's going into its lows, and you're going into those lows with decent volume. You know, we haven't touched the low from yesterday yet on this contract. That low is 41.21. You got to 41.62 today, but the way it's trading right now, it looks like very well will get down into that area. Now, when we talk oil, folks, I'm analyst Andy Hecht. His show is coming up right after mine today, 5 to 6 Eastern Standard Time, every Tuesday, Thursday. Andy's going to be doing a great workshop for all his subscribers. What it's going to be all about is the coming APEC meeting. Now, the APEC meeting, folks, is on December 4th. Andy's going to be doing this workshop Thursday night, 2 days from today. That workshop, he's right after his show. His show is from 5 to 6. From 6:30 to 7:30, he's going to be doing the webinar. And what the webinar is going to be about is the coming prospects of this meeting and what he thinks about the production. Okay, because it's a lot more than just the crude oil. You know, you have the heating oil, you have the gasoline, okay, you have all of that. You can test drive his newsletter right now at TFNN for free. You do that, you get the newsletter Thursday, you get into webinar Thursday. We'll come right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So what we're going to have out here, we take a look at volume-wise, what you're going to have on the NYSE. We're at 661 right now. So let's get 15 minutes. So we're going to be about 850, which is light volume on the way up, because that's what we did out here today. On the on the NASDAQ composite, you're going to be about 1.8, 1.75. That's going to be the same type of setup, meaning that you got over the highs of yesterday, you're coming into the downdraft that was created from last week, and you're doing it with lighter volume. We go into the IWM and the small caps, the Russell 2000. Bottom line, they couldn't handle a higher price either. The IWM, it got to a high out here of 116.15. You're at 114.88 right now. The intriguing thing about the IWM, which is this has been very subtle, but the IWM, is off 10% and hasn't come back. The high in the Russell 2000 or the IWM is 129.10. Which was the May high. So if we take a look at this Russell, we put the Russell up. The Russell right now is at 1152. And the high in the Russell is 1295. And the Russell, this is pretty intense actually. Wow. So the Russell is trading where it was trading 2 years ago. That's really intense, actually. That's a different flavor altogether. So the S&Ps, the Dow, and the NASDAQ is trading where it was a year ago. The Russell is trading where it was 2 years ago. Now, let me pull this back again. I'm just flipping from the Russell back to the IWM. The reason being is that we can get some clarity on the aspect of how this has hit the highs versus how it's hit the lows. So if we take a look at where we are, meaning channel-wise, tops to bottoms, what you're going to see is that when we broke out of the top of the channel inside the IWM is over 120.97. When we did that, the first time that we did that, we broke over it December of 2014. You got right back underneath it. Next time we did it, we broke over in February, and we stayed up. So February 2015, we broke over it. We didn't come back inside it until August. When we come back inside it, how can you tell it's a false break topside? Watch. You go over it. When we broke over it with 133 million shares. That was in February. When we broke back under it, we did 224 million shares, and then we did 285 million. You still have a high volume swing low from October of 2014, which hasn't got hit. That's 103.54. We did 432 million there. When we came down, we didn't make it the whole way. We came down with 285 million and then 260. So there's not enough force inside the IWM to blow that October level out, and we'll find out if in fact it will. The last 2 times we've come down, there's not enough juice. What the case that can be made, though, is this, is that what we're doing now is that now the channel is set up in between the lows that were established in August and October, and the highs that have been established in September and the high from 2 weeks ago. And when you look at that, you still have way too much volume down the bottom, so it's going to be looking to build more cars to get into this area of the October 2014 swing low. It's going to be wild watching this baby shake out, because 2 years is certainly a long time to stay in the exact same place. Now let's go over to King Dollar, because what it looks like King Dollar has done is this. The ABC structure on King Dollar, a 1-to-1 ABC structure was 99.97. The first time up last week, we made it to 99.60. As it went up there, the volume died in the vine. We had volume of 23,000, which makes sense, by the way, okay, because the move was extraordinary. There's plenty of times that had volume and 49,000 2 days before that, okay? So that's just how it works. Now, what do? We came off that, and it came off that, and it came down with 44,000. That is a setup there like, okay, now you're pulling back. Today, we get over that with 27,000. Now, what I think we have here is this. It looks like when you do an ABC structure, you can do a 1-to-1, a 1 to 1.382, a 1 to 50, and a 1 to 1.68. Fibonacci theory is just expansion and contraction theory. So when I'm saying, 1.382, that's the extension of the 1. If that's what we have, this dollar is going to run into, I think it's 101. I got it in the gold report today. It's 101 something. I'll get the exact number when I come back. Bottom line is that that's what it looks like it's setting up. And that in itself is going to be a trip for, no doubt, the metal market still. It's running out of a little steam, but it's over those levels. And you get over this 99.66, it's over that level. So we'll see how that baby does shake out. But that's how it seems to be setting up at this particular point. So if you get that extension, well, as someone that I think it will pull back, I'd like the extension right now without building more cars. Because if the dollar decides that wants to go sideways for a longer period of time right now, like 2 or 3, 4 months, that would be really dangerous in the aspect that the dollar actually could be on the run. And this would be a mind blower, folks. But this would, if I put a continuous contract up, the dollar, if this gets much more strength on a continuous contract, bottom line is really nothing stopping this dollar to like 111. I mean, it's that heavy. So the last time that we were up here, it hasn't hit this level yet. It's the 100.27 and the 100.38 on a continuous contract. Thus far, we've hit 99.83. So, it failed, and when it failed last time, it took quite a hit. I mean, it took quite a hit. It went from 101 down to 92. So we'll see where that baby shakes out. Market-wise out here today, though, it looks to me like you got a true ABC structure on the way down. And the bond market also is generating, saying that bonds want to go higher. Bonds higher, bottom line, gets into market lower. We're at 2.2 on the 10-year, and that's more than it has been, no doubt about that. It is still dramatically lighter than the rest of the world. The oil market, no doubt, it's going to be wild watching how this oil market shakes out. The reason being is that oil is running into the lower end of its trading range. If we look at ExxonMobil, do not bite on this yet. Okay, this is going to be a great trading vehicle for a couple years. Exxon, the last high is 87. We bounced yesterday on lighter volume. We have lighter today. That probably is setting up a small ABC down also. We'll get it into like the 71, 72 area. More than likely at that point, I suspect that's going to be a buy. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow up 19, NASDAQ up 2, S&Ps are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome, folks. And a lot of these vitamin supplies are getting whacked out here today. But you talk about a comeback. It's pretty amazing. So GNC, of course, we all know those GNC stores. That's trading at $29. It was as low as $22.64. Went south in a big way. And if we do take a look at this on a monthly basis, this is, bottom line, a stock that has just gone from $60 down to $22. And it's taken its swing point out with volume. What that's all about, it looks like, so the press release is GNC drops as the U.S. announces action on supplement makers. GNC vitamin shops plunged Tuesday on plans by the Justice Department, the Food and Drug Administration, and other U.S. agencies to announce criminal and civil enforcement actions over advertising and sale of dietary supplements. Criminal. That's going to be a trip watching how this thing shakes out. A press conference is scheduled for 3:30 p.m. today. No companies or individuals were named in the media advisory. Well, evidently, nothing was named at 3:30 because if you look at GNC right there, GNC hit its low when that press release was out at 1250. It's 355 right now. And bottom line is that, you're up at $29. And I do expect, as our man Dave White's saying as well, it's a company out of Palm Beach. I'm sure, there's, GNC, I'm sure they're a little more, they're definitely more careful as to what they're advertising and what they actually carry in their stores, okay? There's no doubt that, some of these folks push out that dietary supplements will cure anything and everything. It's always been that way. I suspect it always will. Bottom line is that, the larger stores most times stay away from that with a 10-foot pole. There's no doubt about it. So as we come into the close out here, what you're going to see is this. You get a failure in the Dow, you get a failure in the NASDAQ, you get a failure in the S&Ps, you got to a higher high, dramatically lighter volume. What is that setting up? That's setting up an ABC structure on the way down. The SPY out here has done volume thus far of 108 million. That 108 is going into the 131. Bottom line, ABC structure on the way down. We're 205.34. That price projection would be 197. Inside the NDX 100, we've done 27 million. You're going into 52. That's a 6-point ABC down, which gets you 106.29 approximately. And both of those levels, by the way, that gets you back to the October 2nd level. So we'll see how it attacks the B point, because on an ABC structure on the way down, what you need is that you come down with volume, which we did. You go up with lighter volume, then you go after the B point, and we'll see if we have volume as we go after the B point. Now, the thing that's going to be intriguing is that what we had yesterday, and this is where it's always cool how these ABCs can set up on the way up or the way down. You got to a lower low, you had lighter volume, and you go up. Now, your B point is the low of yesterday, which is 109.48, which is 33 million shares. What you really want to see, though, folks, is you want to see an expansion of over 52 million. The reason being is that when you have two lows that are so close to each other, to be more conservative, you take the higher volume of that aspect. The bottom line, though, if you break the 33 with volume, that's an ABC down. To be more conservative, I'd rather basically break that baby with 52 million. You stay right there, folks. We're going to be coming right back with some numbers. We're still talking numbers in this market, meaning earnings. Dow is up 10, NASDAQ is up 1, S&Ps are flat. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. It is better to believe than to disbelieve. In doing so, you bring everything to the realm of possibility. Albert Einstein. Market-wise, let's take a look at it out here. We have the Dow Industrials up 6, NASDAQ up 1, S&Ps up 1, gold contract down $15.30, trading at $1,068 an ounce. Silver down 6 cents at $14.16 an ounce. Platinum off 12 bucks, $8.53 an ounce. Copper down a penny and a half at $2.09 a pound. Light sweet crude down a buck, $40.76 a barrel. Bonds, the 10-year up 2 ticks, 126.21. 30 up 15 ticks, 153.23. King dollar up 197 ticks at 99.73. The euro down 45 at 106, and the yen is trading at 123.42. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. This is going to get really interesting, folks, and this is why. We have a little divergence here. S&Ps. Let's start with the S&Ps. So the SPY, folks, gets to a price point today of 207.09. Now, the benchmark on this on the way down, it was November 9th. We come off the highs, you come down with volume on November 9th, you go sideways. That benchmark is 206.95. We went into the 206.95, rejected price, had lighter volume. What that sets up a failure number one, which we got. We also got a failure that it couldn't even hold the highs of yesterday, which was the 205.69. You're at 205.47. Closed under it. So what is that? That's an ABC structure on the way down. Now, A to B equals C to D. What you'll need is you'll need volume of more than your swing point at the lows as you go after the swing low that we're talking about, which is 203.18, which is the low of yesterday. The price projection for the SPY is 197.56. So failure was in spades out here. NDX 100. After the NDX 100, I'll talk to you about the divergence, because this is really intriguing, particularly because the way this was trading just a few minutes before the close. NDX 100, the Qs, we get to 112.29. You do 23 million shares versus 52 million. So you can see you go to a higher high, can't handle the price, backs off, has lighter volume. That's a 6-point ABC structure on the way down, potential. We'll see how it goes after the low of 109.48, and we're going to be looking for a volume of more than 52 million. 52 million is the prior day of Friday. It wasn't yesterday. But as I said, if you want to stay conservative in the structure, meaning make it harder to do, when you have two lows that are so close, I take the low with the highest amount of volume for the full price projection. Okay, so now that being said, check out what we'd had coming into the close out here. So volume, that's your ETF structures. Volume in the NYSE, however, popped up. We did 1 billion shares, and we were at 650 million, folks, at 10 minutes of 4. Okay, so what does that do in the Dow Industrials? Well, what it does in the Dow Industrials is that you got a rejection of price. However, that being said, it is not a definition of an ABC down. The reason being is that you can't expand on volume on the way up, which the Dow did. So we'll see how, we get a rejection of price, so that'll still go after the swing low. We'll see how it attacks the 17,210. Now, on the NASDAQ, you did have lighter volume. The NASDAQ, the volume didn't come in. It was the volume only came in inside the Dow. You're still 1.8 billion versus 2 billion. Let me go back on this for a second. 1 second. So you got, on Dow Industrials, man, bottom line. Now we'll see where this shakes out. But the small caps, also IWM, ABC structure on the way down. You rejected higher price, had lighter volume. The IWM did 32 million shares out here versus 43 million. The IWM, by the way, is the weakest indice out here. In fact, it's trading in this exact same place that it was trading 2 years ago, which is amazing, actually. That's like crazy. We're at 114. We were at 114 in December of 2013. It's 2015. So this is where a huge problem comes out of this, folks. The longer that you go sideways at highs with light volume, the further you can go down. The reason being is that it's all distribution at highs. That's how this sets up. Gold contract. What do we have with gold? They whacked gold, and they whacked gold good today. Down to 1064. We're at 1068 right now. He did 170,000 contracts. It took out the lows. That low had 200,000 contracts, took it out. Bottom line, we take a look at the continuous contract. What you're going to see inside the continuous contract, bring this back. What we're doing is that we're going right back into where we broke out from in November of 2009. And if you have the gold report, you know I'm looking right now, that's 1042, 1042. That's game. That's the bottom line. That's where we broke out from on a continuous contract from November. And I suspect what you're going to have it. Now, we're coming back into that with dramatically lighter volume. Bottom line, though, price has to hold. And when I say dramatically lighter volume, if we go over to the GLD and you take a look at this, what you'll see inside the GLD is that in November of 09, we have 403 million shares. First time we tested it was 156 million, 157 million. We're going to do about 120 million this month. So the test will be 120 approximately. Right now, we're only at 68. 120 versus 157 versus the 403. The key there, folks, is that the number has to hold, and the number is higher than where we are right now inside the GLD. What you want to do, however, is that you have to look at the actual continuous contract in gold. The reason being is that the GLD, because of the expense ratio, is 0.5%. Well, it's 0.4%. That on ETF structures, that continues to go out. So over the course of 6 years, of course, 0.4% is 2.4% lower, which is $2.50 lower. That's the money that comes out. So you got to look at the continuous contract. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's up 6, Nasdaq up 1, S&P's up $1.50. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 6, NASDAQ up 1, S&P's down 2. And as we do each and every Tuesday at 2:30, we have our man, Mr. Andy Hecht. Andy, folks, has a great show every Tuesday and Thursday, right after my show, 5 to 6 Eastern Standard Time. Also has a great newsletter, the Technomento Commodity Report. Now, you can test drive that by coming over to our website at TFNN. And what you're going to see out here today is a little bit different, okay? You know, most of the time you have to go to newsletters. Well, you don't have to go to newsletters today because right in the carousel, at the top of the carousel, you're going to see crude oil prospects coming into the December 4th OPEC meeting. It's hard to believe, folks, that it's November 17th. Bottom line, we start talking December. You know, Andy came up with this workshop, and it's pretty cool, you know, because when he came up with it was about 3 weeks ago, you know, oil's been moving around, but bottom line is that the amount of space that oil's been moving, the amount of politics that's been involved in the last 3 weeks is unbelievable. So you can test drive Andy's newsletter, 1 month, absolutely free. If you do the test drive, because the webinar is only for his subscribers, you come into the webinar absolutely free. So check it out on the front page of TFNN. The webinar is this coming Thursday night. Andy does the show from 5 to 6, from 6:30 to 7:30. He's going to be talking about what he thinks the OPEC nations, number one, will do and what it's going to mean for you and I inside this oil market. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing great. Yourself?
I'm doing good. I'm doing good. So could you imagine what the security is going to be like in Vienna on December 4th for these oil ministers?
You know, I guess that, you know, I suspect that those oil ministers always need that type of security.
Oh, they do. They do. They certainly do. But, you know,
no,
I mean,
listen,
look.
I agree with you. I agree with you. And I absolutely agree with what he's saying, folks. But to me, it was like, it's not, I know you didn't load the question up me, but, you know, when I look at those countries, man, the people in those countries hate their ministers anyway, man. I mean, everyone's so rich and then everyone's so poor, right?
Right. You know. And I mean, look, they are the ultimate target for ISIS.
Yeah, right.
The ultimate.
Right.
I mean, I'll tell you, the thing last Friday in France really kind of harkened back to my experiences back in 2001. And all I can say about that is that volatility in the world leads to volatility in markets, and I think we haven't seen anything yet.
You know what blows my mind? I mean, you know, we've been talking about Europe for a long time, and folks, I had an office in London in the 80s. I think Europe's been toast for a long time. I really do. You know what I mean?
I agree with you. I lived in London from 88 to 92, so I know exactly what you're talking about.
And, you know, what happens, it's just different. It's not like the United States. You know, it's a great place to visit. There's just a different flow that goes there, and I think the tipping point is there, man, and it's a problem. You know, it's like, yeah, I think it's a problem, period. You know,
it's very sad. It's a very, very sad set of circumstances.
And we know the thing go ahead, sorry.
I was going to say that the hawks of the world now, you know, if you look back over the last decades, you know, whenever there was a situation in the war or in the world, something war military, the hawks basically came from the United States. Now the hawks are going to come from Europe, the European governments, because they are truly, truly scared.
Well, yeah, the problem is that they're scared too late, though.
I understand. I saw a guy, you know, a little bit earlier on TV from the Green Party in France.
Yeah.
saying that we got to get group boots on the ground. These are the most liberal, peace-loving, these parties. But listen, nothing scares people more than what happened there. It was a tragedy, a horrible situation. But unfortunately, I think given the makeup of the population over there on the continent now, we're going to see a lot more of this.
Yeah, I mean it's a drag. It's sad but true, man.
Very, very sad.
And
now,
it's very easy to do. The problem is, folks, that the aspect of just someone wiping people out is very easy to do. That's the bottom line.
Right, we live in a free society.
If you want to die, guess what? It's not. You're not sending someone to the moon on that deal. It's a bad scene.
You're fighting an enemy that that is unlike any other enemy we have fought in modern days.
Well, I think all that people have to do is read history, man.
Right.
It's real simple, man.
Right.
This has been going on for 5,000 years. This is not new.
Yes.
This is not a new deal, folks. Look at any history book, man. I mean, it's real simple.
You're absolutely right, but. It wasn't organized and armed the way it is today and spread out all over the world in little cells like it is today. This is the problem.
Yeah, there's no doubt.
This is the problem. Anyway, I was surprised. I was very surprised by gold on Sunday. I think it opened up. What did it get up to? Just under 1,100?
Yeah.
I was very surprised by the action there. I mean, look, I've been bearish on gold.
Oh, yeah,
but
right.
After Friday, I said, this probably will lead to some more flight to quality type buying. But, look, I think it really just shows how weak this market is, how weak commodities are, how strong the dollar is. And just, it's almost a vicious cycle here at this point.
No, listen. There's no doubt, man. Gold not holding, when the world's falling apart. Yeah, that's saying quite a bit.
Right. That's about. And look at copper today, 206.60. I mean, I've been saying all year long that my target's been $2. I mean, would I aggressively short it here? No way. I mean, you're close. You're 10 cents away from what my target is. Can I see it going through that target? Absolutely. But I think that the risk volatility is going to pick up here in all markets. I mean, it has already, but it will continue to do so. And the one market that I am really, really convinced is in a solid trend here is the dollar, Tom.
Yeah, well, if this dollar takes out, so I suspect it looks like the dollar is going to do a 1 to 1.382 on the way up. But if you look at that dollar, man, this is going to be really a trip, folks, because there's no doubt if I'll put this up on a continuous contract, and what you're going to see is that if this dollar can get up and over this 100.38, man, there's not much stopping it.
I know that. And the thing for me is, I mean, that's the technical story, and that I buy into. But for me, it's the fundamentals, and it's just relative interest rates, relative moderate growth versus the alternative, which is what's going on in Europe in terms of their economy and in China in terms of slowing. But more so, it's, again, another vicious cycle, because when the dollar rallies, commodity prices fall, and when commodity prices fall, the revenue that goes into countries like Australia, Canada, Brazil, Russia falls, and the dollar gets stronger.
I absolutely agree. Where my head goes with this, Andy, is that it looks to me like we get inflation going pretty good in this country. I know the CPI come out today, and what happened, folks, was come out even, 2.0, okay? 1.9 on services, 2.0 on food. And that's not inflation, but I don't buy it, because I
don't buy it either, because when it comes to medical costs, tuitions, other things, and by the way, manufactured products are very high because of all the compliance costs.
Well, just the stuff that we use. Here, stay with us a second.
Sure.
Awesome. Andy Heck, Tom O'Brien, you stay right there, folks. We'll come right back. Dow Industrials up 6, Nasdaq up 6, S&P's down 2. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. And don't forget, right after my program today, 5 to 6, Andy's got a great program. He's also going to be doing a webinar, folks, Thursday night. Let's talk a little bit about the webinar. So, when you know, it's crazy, man. In time, and of course, is everything. You set this thing up like 3 weeks ago, and oil's been banging around. But man, the volatility in the world right now. What do you think? I mean, what do you think these guys are going to do, man? Al, I'm Steve.
Tomorrow I'm going to write the webinar.
Okay.
You got me?
Yes.
Oh, okay. Sorry, I thought you missed me for a minute. No, tomorrow I'm going to write the webinar, and I've been thinking a lot about it, and I kind of have it outlined a little bit. But right now, when I look at market structure, listen, everything points south in oil right now.
Yeah.
So you got market structure. We'll go through that. I'll put the meat on the bone and the numbers around contangos and how wide they are and all that. The processing spreads are telling us that as we come into winter, the demand for heating oil is the lowest that it's been in years.
What's amazing is that, folks, the heating oil has broken its August lows.
Right.
That's pretty wild, man.
It is more than pretty wild. It's telling us something about demand, because we have to remember, Tom, that consumers don't buy raw crude oil.
Right.
You don't go out and buy raw crude oil.
Right.
You buy gasoline for your car. If you live up north, you buy stuff to heat your home. If you're a consumer and you're going on a trip, you buy jet fuel to fly.
Yeah.
these are all very weak markets. So that's translating back to lower demand. Then you look at Brent versus WTI, and you see that premium, which was $25 a couple of years ago, slipping. Now we're just under $2 for the Brent. So everything is telling us that crude oil is heading back down. That is everything but the world situation, because where this craziness is coming from that attacks us in New York City or Paris or Madrid or anywhere lately, it's all coming from that turbulent region, which holds over 65% of the world's oil reserves. So the bottom line here is that, there is, right now, all the fundamentals say lower. All the fundamentals say lower. But there is those big question marks there that can turn this market on its head, in a matter of hours, as you know. So it's going to be very interesting to see.
It doesn't pay attention until it does, right?
Exactly. And, I a little hint, I'm going to go through it in detail, but at the workshop, basically my view on the oil ministers are, there's more infighting in that cartel now than ever in history.
Yeah.
And they couldn't decide whether the sky was blue or gray on a clear day.
Right.
So this is going to come out of there, and they're going to come out of there unless they're, the other thing is that in years past, they did operate on the element of shock to the system. The market would be shocked if OPEC came out and said on December 4th in the afternoon, hey, we're cutting production from 30 million barrels ceiling to 28. The market would be shocked, and oil would certainly rally on that.
Whether now, they did it or not, right? Whether they did it or not.
Well, that's the other thing. Their ceiling now is 30, and they're pumping, close to 32 million barrels a day.
Okay.
And by the way, the Iranians are saying we're going to be pumping even more. Now, if they're going to pump more and they're going to stick to the ceiling or where they are now, someone's going to have to pump less. You think the Saudis are going to pump less? The Saudis and the Iranians, they don't only hate each other, they want to wipe each other off the face of the earth. So it's a very interesting meeting of a cartel where you have several parties in the room who are actually at war with each other.
At war with each other, and then you get ISIS with a war with all of them, right?
Oh, all of them hate ISIS. I mean, by the way, nothing makes for stronger friends and stronger allies than a common enemy. And that's what we're facing right now.
Yeah.
So it's just a very interesting world situation. And now here is crude oil hovering, $1.40 above contract lows?
So do you think that there's just so much crude that, okay, I guess the question that I'm going through my head, we know that there's more people in the world. We know that China has been growing exponentially. India, of course, still is growing, but India's not as strong as China, that's for sure, meaning just production-wise. The United States is growing. I mean, there's more people in the world. And so that means that we should be using more product. I mean, has there been that much more oil discovered?
Well, there's plenty of oil around. According to the IEA last week, there's 3 billion barrels of inventories right now. Tankers are full.
3 billion barrels that are already out of the ground?
Yes.
Oh, my God.
Around
That's
the
hilarious.
World. Well, U.S. alone has 700 million.
Wow.
China's been, by the way, China, although they're slowing, Tom, their crude buying this year is up. Why?
Well,
because
that's my point. I mean, when I look at it, I'm saying to myself,
strategic petroleum reserves.
Yeah. I mean, and with less expensive prices, man, I'm driving more.
Right, and Russia is pumping like there's no tomorrow because
so
Russia
there's more
needs
oil.
cash.
That's
there's a lot of oil around. And there's also a lot of cheap natural gas.
Yeah, well, it's going to be interesting. NG, now I'm long natural gas right now. I kind of like how it's trading, man.
I know. Be careful on Thursday because, the one thing that could get you another issue there is we're at about 3.978. If that sucker goes above 4 trillion on Thursday, that could embolden the shorts a little bit to push it down. They have that 218.80 target, which is contract lows on December.
Yeah.
And then they have 194.80 below there. And you're in a general environment.
But see, I agree. Listen, I agree, but I just like how this is trading, man.
I agree.
I've
been
trading this since last Thursday. It's a nice little trade.
I hear you. We'll see what happens on Thursday. I mean, listen, I would never be short going into winter in natural gas. By the way, they're going to get 18 inches of snow in Colorado.
I'm not short. I'm long.
No. I said I would never be short.
Right.
So I agree with you. They're going to get 18 inches of snow in certain parts of Colorado tonight. And last night here in Las Vegas, 37 degrees, Tom.
37, man. You better move down to Florida. 37, man.
I got a winter coat on at night here these days.
Look, I can see ice cubes.
Cold.
I see ice cubes on your nose, man.
It's cold, baby. I'm wearing a long sleeve shirt.
I wonder why, man. Do you get 37 degrees and 40 degrees in Vegas in the winter?
Maybe sometimes in January or February, maybe, but this is November. It's not even late November. It's not even Thanksgiving yet. This is very odd weather patterns. And I think it's down to El Nino and what's going on with the colder, with the warmer Pacific and the whole flows. It screws up the weather patterns, and I think we're seeing that.
Hey, did you see that? I want to switch gears in here for a second. Did you see that article that the cocoa futures are going so big, and I remember we were talking about it when it cracked the 3,000 level, that in Colombia the cocaine farmers are switching to cocoa because now it's actually worth it.
I didn't see that, but it doesn't.
It's a pretty cool article.
Yeah, it doesn't surprise me at all. Cocoa 3,400 is a very key level. Today we got up to 33.95.
Yeah.
Above there, it's kind of clear sailing to 38.26, which is the March 2011 all-time highs there. And listen, this is another commodity. Although China is slowing, the Chinese started eating chocolate confectionery products. And once you taste chocolate, you never want to go back.
I know. It looks like it's going to go 3,600 to me, man. This is wild. Yeah. You have a great next 15 minutes. We're going to have you on the air in 15 minutes, man. It's a beautiful.
Thanks, buddy.
Thanks,
See you
brother.
next time.
Have a great one. Have a safe one. You stay right there, folks. Andy's going to be coming right up 5 o'clock. We're going to come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Excuse me, folks. Welcome back. We had the Dow finish up 6, NASDAQ up 1, S&P's up 2.5. The RX, folks, just continues to go south. I can't even imagine owning millions of shares, which many of these hedge fund managers not only did, but they doubled and tripled down. Down another $3, $70.32. This little baby, and we'll see where this shakes out. But when you put this back, I want to remember the 55 number. That's where this thing wants to run down to. $55.88. That was the high that was generated out here August of 2011. So we'll see how that shakes out. But man, oh man, you talk about a hit. And the 13F filings come out on this. And inside those 13F filings, you had quite a few hedge funds, large hedge funds, buy into this, and they bought in big, not a small amount. The biggest one that bought into this was Grantham. Grantham had bought 6.4 million shares, now owns 8.1 million as of the filing September 30th. That being said, when you take a look at where this was on September 30th, just so you can understand the type of number that we're talking about here, it's just a monster, because on September 30th it was still trading at 100. The lowest it was, I believe, was $160. So you're at $70. You buy another, what did I just say, 6 million shares, and you're down another $90. That's pretty intense. That's about as intense as you can get. The IBB. So if we take a look at some of the biotechs in general, what the IBB did out here today, that was up $4. We're at 329. This is going into, let's see, we did 1.4 million, and you're coming into 2.6. Didn't reject price today, but I suspect we're going to get it, but we haven't got it thus yet. That rejection that I'm talking about was just the last downdraft. The large downdraft had a volume of 9 million. That's when it got to 331. We made 331.51 today. You did 1.4 million. You closed underneath it. That's where your rejection is. So we'll see how this is going to trade out. If we go in and take a look at a few of them, you got Amgen. That went up $3.10 today. Regeneron went up $12.53. Let's see, Celgene, because what hasn't happened yet, Celgene only went up 97 cents, but what hasn't happened yet is that you had the breakdown inside the IBB going into August, does the counter trend bounce on the way back up, hasn't broken down again. I do expect you'll get a breakdown, but it hasn't done yet. Apple, what you have with Apple, bottom line, rejected lower, higher price today, had lighter volume. Apple now is going to go after its swing low of yesterday, and Apple also may be an ABC structure on the way down. If it is, your 8-point on Apple is 123, which is the high that was generated out here November 1st. Your B is 111, so you're talking about 13 points. Your C would be today, which would get you a 102 price projection, and that's doable easy, because 92 is the low that was established on the 24th. And if you start seeing more selling inside Apple, I know what we got to do, because you know what, these 13F filings, see, they just come out yesterday. We want to see who's selling Apple, who's buying Apple. So the sellers, look at the sellers, interesting. Okay, Apple's done, folks. Fidelity's the seller. Fidelity owns 167 million shares. The last filing, they sold 13.3 million. What I mean specifically, when Fidelity goes into an equity, it's awesome. They go in for, takes them a year and a half to buy. When they're selling, forget it. It's disaster, folks. They're one of the largest funds out there. Through all their funds, they start selling. And you're going to see this right in this. We've talked about when Fidelity's selling, State Street's selling. State Street sold another 5.1 million shares yesterday, the 16th, 11/16. They have 217 million shares. Now we want to look for Wellington in there and MFS. Here's Wellington. There it is. So check this out. Wellington sold also 14.9 million shares. They have 38 million shares left. The reason we're looking for these, if you're a new listener, these guys, I learned this in 1994, folks, okay? We were all in the same block up in Boston, okay? And it's not that it's not that they talk to each other. What happens is you tag each other in these Bloombergs, and you just find out what are they buying, what are they selling. This is how they all keep their jobs. This is how you run stocks up. And when they're getting out on the way down, man, get out of the way because they all move the same way. There's MFS. So MFS is always smaller. That's Mass Financial. They sold 887,000. So all you guys in Boston, I know as you're listening, yes, unfortunately we get you tagged here. 12.9 million they have left. Every one of them selling. Bottom line, State Street selling, Fidelity selling, Wellington selling, MFS is selling. There's a lot more than that. The thing to wrap your head around, folks, is that when they start selling, well, here, I'll give you the numbers, how much they own. Fidelity owns 3.1% as of the last filing, which is 167 million shares. Wellington owns 0.69 of 1, which is 38 million. So that's little ballpark it. So the 170, that's 200. That's 200 million shares. That's not bad, huh? MFS, what did I just say? 1 second. MFS, where is she? You get the gist of it. It's a lot of shares, folks. It's a lot of shares, and I expect, you know, well, let's see if we had any buyers, okay? Because, of course, when you get the sellers, if you have as many buyers come in, well, guess what? You could stabilize the stock. When we take a look at, okay, so buyers, this is what the buyers coming in. Bank of America bought 8 million. Greenlight Capital bought 3. That's one of the funds that we used to. Manning and Napa bought 2. Prudential bought 2. Blue Ridge Capital bought. That's 2 million. All of these. Okay, so let's say you get 8332222. Now let's take a look at the sells. Forget it. You take a look at the sells. Watch this number. 14 million. Wellington. Oh, I should have done it this way first. Check this out, folks. This is sick. The largest sellers in Apple, okay, are right down the block from each other. Wellington sold 14.9 million. Fidelity sold 13.3 million. The next one is Capital Group. Capital Group, folks, is American funds out of California. Good fund group, by the way. 8.4 million. Next one was Deutsche Bank, 7.9. This is what the difference is, too. When I was reading all those out, do you remember when I was reading them out? It was 3,222 on the buys. Look at this on the sells. 14 million, 13 million, 8 million, 7 million, 7 million, 6 million, 5 million, 5 million, 4 million, 4 million, 4 million, 3 million. You can go I go the whole page of 19 down, and you're still at 2.5 million shares. Bottom line, they're getting out of Apple. You own Apple, folks. Make sure you put some stops in. That's what it comes down to. After the closeout here, CTXS. Let's take a look at the Citrix. Citrix closed at $78.42. That looks like it's trading at, it's trading all over the place, isn't it? 78. Is it trading at 76? Yeah, it's trading at 76.50. So it's down $1. It's trading down another $2. And you stay right there. We'll give you those numbers as soon as we come back. This is Tom O'Brien. This is TFNN. Don't forget, folks, Andy's going to have a great workshop for you coming this Thursday. Come over to our website. Sign up for it right now, right on the carousel. Dow finished up 6. NASDAQ up 1.5. S&P's up 3.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. We go over and let's go over to Europe and take a look. Now, what was unusual today is that, bottom line is that our markets, basically sold off when, in fact, Europe did all right. You had the UK up $122. This baby here, came into a downdraft. Now, we did volume of 719 million versus that downdraft of 869. So that's saying it's not going to make it, but bottom line is that it didn't do bad. That's in the UK. We take a look at the DAX in Germany. What we had in Germany, Germany was up 257. This thing wanted to take out its high. The high that we're talking about was the high of November 6th. That high was 1155. That was at 92 million. We did 76 million. It looks like tomorrow morning, at least it wants to go test that high. We'll see how we handle it. Now, you go to Asia. We take a look at the Hang Seng. Hang Seng in Asia, bad scene, folks. The Hang Seng right now is at it was up 253. But what the Hang Seng also did, this is so cool when this happens. It's really wild, man. I should have looked at this earlier. So the Hang Seng last night did what our markets did, folks. It was up 450 points. It gave back 200 of those points. It was going into the downdraft that it actually went into with lighter volume. Hang Seng did 1.6 billion versus 2 billion. The Hang Seng's doing an ABC down too. And A on the Hang Seng is 23,000. The B's 21. Let me see, 23,400. To 21. Let's say 20. So it's a 1,400 A to B, which the C point is 22,400. So it'll be 21,000. It's 21,000. 21,000 coming at you. 21,000 is almost the same area. Unreal. October 2nd. Let's go take a look at the Nikkei in Japan. The Nikkei in Japan, NKY. Nikkei in Japan, oh, that's interesting. That failed also. So the Nikkei high. So the Nikkei was up 330, ended up being up 230, tested its high. Now, it looks like the Nikkei is going to be up there again. The Nikkei had volume. So the Nikkei last night did 1.4 billion, was going into 1.2. Yeah, so the Nikkei wants to go into that again. Now, the Nikkei is also going into, and the Nikkei has the same deal, folks, is that the Nikkei has the 3 black crows on the way down, too. If we just go over to our own market again, those S&Ps, this is crucial to wrap your head around. The 3 black crows are not only in place, they're in place in an extraordinary way. And the 3 black crows specifically go like this, folks. After a long uptrend, when you come down 3 days in a row, approximately the same price, and in my case, I'll put volume with it, but the same price, that is a pattern, a candlestick pattern, okay? So what happens with all these patterns? Some of them, will work and some of them won't. Bottom line, it's a probability deal. What happens with a 3 black crow is this. So first off, they love to get tested. And it's hard to believe that after a downdraft as big as a 3 black crow happens that you can get it tested. Well, we got it tested. It tested with lighter volume. It's come back down with heavy volume. Now, the specific 3 black crow pattern sets up a much larger downdraft, okay? I've seen 5 or 6 of them, I've seen more than that. I've seen 5 or 6 of them that actually worked. Bottom line is that if this pattern thus far, that's what you have. This pattern is setting up that we're coming into much lower prices. And as a few of the targets said in the den, if you think the rest of the world are the only ones that are going to get hit, I'm not talking about violent-wise. I'm just talking about economic-wise. That isn't how it goes, folks, okay? That's just not how it goes. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Stay tuned for Randy.